Welcome back to the next episode. If you watched my last video, you know that I had already exited my short trade, but only today does it become clear that I definitely got out too early. When that video went live, no one knew how the market would develop. But now, with the benefit of hindsight, it's obvious. The trade would have run much further into profit. However, it's not too bad, because on Thursday, I entered another short position in the Dow Jones, which brought me a solid profit. On the other hand, I also took a long trade in gold, which unfortunately turned into a losing trade. What led me to these trades, how I executed them, where my entries were, where my stop loss was, and what my target levels were, you'll see all of that right after the intro. My first trade yesterday was in the gold market, but unfortunately it ended in a loss. My idea was that the support zone at 2,890 points would hold, and that we would then see a recovery towards 2,960 points. For this reason, I went long at 2,895 points, with a stop loss at 2,879 points. Unfortunately, I was stopped out about 1.5 hours later, so I had to record this trade as a loss. Here we are in the Dow Jones, but please don't be confused by the orders you see on the chart. This is my current position, which I'll discuss at the end of the video. For now, let's focus on yesterday's trade. My second trade was in the Dow Jones. I entered a short position at 43,830 points. However, I made an input error when trying to adjust my stop-loss order, which resulted in me being mistakenly stopped out at 43,905 points. That meant a 70-point loss. My biggest winning trade yesterday was also in the Dow Jones. I identified Wednesday's highs as a resistance zone and went short at 43,923 points. I held the trade until the support zone and closed my position at 43,368 points, as the market movement became too uncertain for me afterward. For comparison, while the Nasdaq had already broken out of its range significantly and showed a strong sell-off, the Dow Jones remained within its range and displayed less downward momentum. Since I didn't want to risk the market reversing back up, I decided to close the trade at 43,368 points and lock in a $2,700 profit. Despite the losing trade in gold and the small mistake in the Dow Jones trade, I was still able to grow my account by over $1,000. Now to my trade today. We have seen that the Dow Jones has fallen out of its range, yet no significant selling pressure has followed. While the Nasdaq and S&P 500 continued to decline, the Dow Jones showed less weakness. Additionally, we are in an important support zone, which has attracted buyers multiple times in the past. This increases the probability of a potential rebound. Another signal for a possible trend reversal is the bullish engulfing pattern that has formed on the 4-hour chart. Based on these factors, I decided to enter a long position. An interesting aspect to consider is the seasonal phase. Looking at the historical performance of the Dow Jones from 1986 to 2016, we can see that from mid-February to early March, the market has shown a higher probability of declining prices. However, starting in early March, a rally typically begins, which can extend into the summer months. Of course, these are statistical patterns observed over the past 30 years, and they don't necessarily repeat every single year. Still, this seasonal behavior provides an additional argument in favor of my long trade at this level. The trade is currently slightly in profit, but I am curious to see how it develops. These have been my trades of the week so far. Now I'll see if I can find a good long entry in the Nasdaq or S&P 500 at the US market open at 9:30 a.m. Right now, I'm leaning towards looking for a long opportunity, attempting a counter trade to capitalize on a potential rebound. The reason for this is that all major indices have reached key support zones, which could increase the probability of a short-term recovery. Additionally, Seasonal patterns suggest that the market typically enters a bullish phase starting in March. This aligns perfectly with the current timing, as today marks the last trading day of February, and on Monday, we will already be in March. This could further support the potential for an upward move. I believe we are entering a very exciting market phase. Volatility is increasing, which is ideal for trading, as it allows for better opportunities to capitalize on larger market moves. This creates great opportunities which I will be watching closely. Important: this is not financial advice and not a buy recommendation. Trading leveraged products and futures carries significant risk and can lead to losses. Always trade with caution and manage your risk wisely. I'm excited to see how the market develops and will keep you updated. Thanks for watching. See you in the next episode.